the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares moved higher even as Asia traded mixed. So if you look at the Straits Times Index, it was up 0.42% at 3,912 points at about 2:46 p.m. Singapore time. And that is with a value turnover of some 716 million Sing dollars seen in the broader market. Now let's take you through the closing numbers. The STI ended in the green as well, up 0.41% at 3,911 points. In terms of value turnover, we're looking at 1.22 billion Sing dollars. Gainers outnumbered losers, 233 versus 224. Top advances for today, let's take you through them. We've got here DBS, UOB and ASUS. And top decliners, we have Jardine Saigon Carriage, GMHUSD and Wong Fong Industries. Well, in terms of companies to watch, we have OCBC because the bank announced yesterday key leadership changes to its global wholesale banking franchise to take effect on the 1st of October. Now, elsewhere from Singapore's real wages rising at a faster rate of 3.2% in 2024 to China planning an overhaul of its commodities markets to attract global investors. We've got more local and international headlines in focus. Also on deck, how a Tencent Holdings subsidiary is snapping up a nearly 10% stake in SM Entertainment, valued at about $180 million, marking a rare Chinese investment into a South Korean company in recent years. Well, for more market moves and views, joining me on the line is Tu Jun Cheong, dealing manager from Mumu Singapore. Jun Cheong, how are you? Congrats on the promotion.
Hi, Tintin. Thank you so much. I have been good.
Yeah, and Jun Cheong, let's start the day with the Singapore stock market as usual. How did the STI fare today? Any surprises when we look at the biggest movers?
I guess the Singapore Straits Times Index, they mirrored the gains from the US trading session last night. So they closed above the 3,900 mark and to close at nearly 3,911 or about 0.41% up. So much of the gains today we see from the STI came from the trio of local banks. So DBS, OCBC, UOB, which of course coincidentally holds the largest proportion of the STI. So for me, at the counters to watch for, I would specifically be looking at Yangtze Shipbuilding, even though it's not one of the top gainers today. Because right now, as the looming trade wars and the tariff war gets closer and closer to the end of the 90-day pause, investors would want to see more clarity these days and bring some, I would guess, certainty back to their investments. I think more is being done to bring a lot of certainty to trade and investments, as we have seen from the 46th ASEAN Summit. So Mr. Lawrence Wong, our Prime Minister, spoke about the possibilities of 100% tariff-free trade with ASEAN, or even to deepen collaboration with external partners.
I see. And Jun Cheong, zooming in on some of these companies to watch, we've got OCBC, because OCBC announced key leadership changes to its global wholesale banking franchise to take effect on the 1st of October. So among the changes, Elaine Heng, who's now the Group Chief Strategy and Transformation Officer, she'll succeed Linus Goh, who's the current head of global commercial banking, who will retire on the 30th of September. How significant is this move for investors if we look at the share price movements today?
Share price-wise, I think there is not much significance to the leadership changes to the rise of OCBC shares. Coincidentally, rather out of the trio of banks, OCBC rose the least today. So I guess overall, the whole banking sector pushed up today, but it's likely to have much significance over this leadership change. Because OCBC has been on the leadership changes over the years since Ms. Helen Wong took over the top role in 2021. Personally, for OCBC, I think the key driver will come from the Greater China expansion over the next few years, as of course we see the prospect in the Chinese market begins to recover. This plus the weakening of US dollar could bring about wealthy investors towards this whole Greater China region, and in turn boost OCBC revenue or in turn share price. From the OCBC leadership changes, we have seen so much changes within their Greater China team, such as Mr. Wang Ke from the OCBC Wing Hang CEO to now the new head of Greater China.
Now, from OCBC, Juncheng, let's set our sights on Amara. I believe we talked about Amara the last time as well.
Yeah.
The takeover bid. So basically, the independent financial advisor appointed for the takeover bid for Amara, the hotel group, has deemed the offer at 89.5 Singapore cents a share to be fair and reasonable. And it has advised the company's directors, considered to be independent, to recommend shareholders to accept the offers. Any thoughts on that, or was that more or less expected?
I think this is more or less expected because the offer price is 89.5 cents. It was about 33% higher than the net asset value of Amara at the end of 2024. Share price-wise, Amara has been trading very thinly since 2024. So this privatization offer really gives some of the shareholders opportunity to let go of their shares at this rather better price than if they were to leave it on demand and supply of the stock market. So investors who do go ahead and accept this offer should consider their next move after privatization is completed.
Okay, let's stay in Singapore, Juncheng, because data out today showed real wage growth in Singapore rose at a faster pace of 3.2% in 2024 as nominal wage growth outpaced inflation. What does it mean for us as workers, and also what does it mean for the MAS when it comes down to monetary policy then?
I think it's good news for everyone as wages have increased ahead of inflation. So most of us here in Singapore, we will have felt the rising cost of living. And this increase of wages would certainly help a lot of families feel more at ease. Now, when it comes to MAS, real wage growth outpacing inflation means that workers have more purchasing power, which, of course, theoretically, they can cause inflation to rise. So this is where next MAS will look into inflation figures. And so far in 2025, inflation has not been heating up and has been rather stable. So both are rather good news for MAS. And then, of course, MAS now would have to look at wage growth from a sectorial angle because different sectors can perform better and it can be skewed towards one side. So the things such as the progressive wage models have certainly helped several sectors to increase according to the different sectors. Now, this is where MAS and the government would have to implement different policies to cater to the different group of workers and plan ahead. So what they do use is the dollar nominal exchange rate index, dollar near, to conduct a lot of monetary policies. So within Singapore, I guess rising wage is good, stable inflation is good. However, what they are more worried now is the geopolitical and macroeconomic factors. And the US dollar has been weakening against the Sing dollar, with the pair trading below 1.29 range. So a strong Sing dollar can be good for imports, bad for exports. So if the global situation, I guess, does not really improve at all, it's likely that we see some changes during the next policy meeting in July by the MAS.
Okay, now if you're just tuning in, we're now in conversation with Tu Juncheng, dealing manager from Mumu, Singapore. Across the region, Juncheng, let's have a look at China. It is on the cusp of its biggest move yet to open up its vast commodities market. After the Shanghai Futures Exchange unveiled this internationalization plan to streamline access for overseas investors. So if we go by a statement out yesterday, it is soliciting views on a proposal to let participants post foreign exchange as collateral for yuan-denominated trades. What do you make of that? And really, what does it mean for one, international investors, and two, for bosses like the SGX?
So it's always good news for investors whenever there is competition because pricing spreads, they can become more attractive to a lot of investors and traders. So China also being one of the largest commodities consumer is certainly trying to make a mark for themselves in the commodity space. And at the same time, I guess, is to really increase the appeal of the Chinese yuan. We have seen some of this in the form of yuan price crude oil futures, although I would say the usage has been considered limited compared to the WTI, Western Texas, or even the Brent. So over here in Singapore, a revamp of this Shanghai Futures Exchange would inevitably bring some competition in terms of volumes. So on the bright side, the competition will bring in more investors who have not been in the futures space into this futures trading space, increasing overall demand. Maybe on the not so bright side, some of our futures traders from Singapore may move to Shanghai, especially our Chinese investors. However, for Singapore, we will likely still continue to be the benchmark for pricing iron ores in the futures market.
Okay. And in the meantime, Juncheng, are you a K-pop lover? Were you a K-pop lover?
I used to listen to a lot of K-pop.
Yeah, we used. And if you were a K-pop lover, if you listened to K-pop and the, was it 2010s, you would know of Girls' Generation, which is under SM Entertainment, and you would know of, was it Super Junior? Yes, Super Junior.
Yes, Super Junior.
And there's a reason why I'm bringing up Girls' Generation and Super Junior, because they both belong to SM Entertainment. And apparently this Tencent Holdings subsidiary is snapping up a nearly 10% stake in SM Entertainment, valued at about 180 million US dollars. Now, this marks a rare Chinese investment into a South Korean company in recent years. How would you read into that move?
So, SM Entertainment, they used to be one of what we call the big three entertainment companies alongside YG and JYP Entertainment. Yes, and that is really before Hype, the agency company for BTS, as many have known, took over the entire Korean entertainment scene by storm. Right now, the combined market cap of the big three entertainment, so YG, JYP, and SM, is just around 60% of Hype as of today's closing.
Wow.
So why I talk about Hype is because Hype is the company that will be selling their shares of SM Entertainment over to Tencent. And according to Hype itself, they state that a sale is part of their strategy to streamline non-core assets, and the capital will be used to support future growth initiatives. So really for me, I will read this move in several ways. I think firstly, it's a Hype business model is very internationalized, like BTS. They are not just targeting in Korea, in Asia, but really much of Europe and North-South America, sorry. So SM Entertainment, on the other hand, really thrives in Korea and really the rest of Asia, like your Japan, your China, maybe in Singapore. But success outside is probably lesser comparable to, let's say, YG Entertainment, which is doing preferably well in Europe and America. So I would say it could be likely due to a mismatch of business targets or model. Another way is that Hype may be selling their shares. For those who are looking at a SM Entertainment share price, they're selling it at a discount to Tencent. It sounds unprecedented to most investors. However, this could bring about future collaboration between Tencent Music and Hype, as well as between Tencent Music as well with SM Entertainment. Because there has been this unofficial K-wave ban in China, and this could possibly be start of something new for the K-pop industry in China.
Yeah, I remember talking about that when I was still in university, so that was so many years ago, and now we were just talking about perhaps, lifting that unofficial restrictions. But yeah, so it appears to signal more things on Hype instead of SM Entertainment for you, isn't it?
Yes.
Okay. And finally, Jun Chong, there's one company that we must look at, and this company's CEO is Jensen Huang. He wears a leather jacket. It seems like investors are taking a wait-and-see approach as they nervously look to the results released for Nvidia. What are you expecting on this front?
So share price-wise for Nvidia, for those investors who have been looking at it, it has been climbing steadily since the drop in April. Investors and traders will certainly be wide awake tonight for Nvidia's earnings results during the post-market session later. Forecast by many analysts suggest a positive outlook because from the likes of your Blackwell server chips to the impacted H20 chips, etc. So for me, what I'm expecting is rather than share price, I would expect high volatility in the option trades tonight. So of course, this is because the earnings season is one where options, the implied volatility of options really spike up, and there will be a lot of interest, both from a speculation perspective as well as from a hedging perspective. So figures-wise, really based on previous Nvidia earnings, we have seen that they tend to really beat analyst expectations. However, a lot of Nvidia's shareholders and investors will be looking at what Mr. Jensen Huang will say during the earnings call tonight, especially on the future guidance in regards to what Nvidia is going through now, the ongoing tariff war, the chips ban, etc.
Lots to watch indeed. Thanks so much, Jun Cheong. That was Tu Jun Cheong, Dealing Manager from Moomoo Singapore. Thank you so much for joining us on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.